Hey everybody, Courtney Smith here with our Wall Street winners for June the 27th, 2022. This is our disclaimer for the same date. All right, so big changes here. I think we've started the seasonal rally. We've been talking about this for several weeks, almost a month, but here we are. And I think that Friday's action was the final signal that we're going to be rallying for the next 2 months. And this is going to be a significant rally. That means the major bear market is still intact, but that we're going to have a significant rally. And everything that was going on last year is going to go on this year, this 2 month period. In other words, we're going to see technology gain on the old economy. Dividend stocks will be thrown to the turf, et cetera, et cetera. So we're going to imagine you're back in 2021, and that's what the next 2 months are going to look like. I think we can see lots of things move back up higher, but the bear market's not over. And it probably won't be over until this fall, fourth quarter, maybe first quarter of next year. We'll keep you posted. Of course, you always want to be watching Wall Street Winners in order to maintain reality check of what's really going on. So an interesting point here. This is the S&P 500, and gap over here on the right-hand side, another gap below it, but we made a gap on Friday. Now, when you talk about indices like the S&P 500, that doesn't happen very often. So this is what is called an island reversal, and it's quite bullish. So that's why I say we've been saying that the seasonality would come in at the tail end of June, and this little consolidation down here was a maybe, but with this gap up and with the island reversal, that's it. We're into bull mode again. Now, let's take a look right here. Also quite interesting. This is the Dow. We got the big downtrend, down channel, I should say, going on here. We got the gap there, and then we've got the gap over here. So the same island reversal in the Dow. Now, look in the upper right-hand corner. Here you have a couple of things of interest. Number one, the buying pressure is rocketing up. The selling pressure is coming down pretty hard too. So they will pass on Monday. We'll probably start seeing the buying pressure be above the selling pressure. And also the black line here, which was going up. When it goes up, that means it confirms whatever the trend is down here. The trend could be bullish, it could be bearish, it doesn't matter. If this is going up, it's confirming the in this case, bear market. Over here, when it was going down, it was saying, nah, it's a neutral market. But notice we turned down, which means that the bear market, it could still be on, but it means that we're really into a neutral market at this point. And from a technical perspective, we're not making higher highs or higher lows, so we're not back into a bull market. It's other indicators that tell me we are, which we'll get to in a second. NASDAQ, same thing, the same island reversal, except notice that this whole pattern for the last month is more bullish than the S&P and the Dow. We've been highlighting this to you. We've been talking about how we're starting to see these NASDAQ type stocks outperform the Dow stocks, and the Dow stocks are the ones that outperformed during the whole bear market this year. That is now reversed. That's a big change from what we have been seeing. Now, this change, I think right now, will last for about 2 months. Still neutral on our seasonality indicators over here. Now, but here we go. This is exactly the bull market we were telling you about. Follow the red line. Should rally up into the middle of July, then a little hook down, and then a move up to this period in August. And this is going to be, the high is going to be somewhere in the first 2 to 3 weeks of August, and then we're going to go right back into a major bear market. But let's enjoy the bull market while it's here. Let's go make some money. I don't care if it's going up. I don't care if it's going down. My job is to make money. I'm a pro trader. That's what I do for a living. Asset allocation. They moved back into stocks after the previous 2 weeks where they just capitulated and just said, okay, that's it. We give up. No more stocks. We have to have bonds. They said, well, you know what? We changed our mind. We want some stocks now. Let's take a look at risk. Risk didn't improve, which is quite important. This is really sideways. But in the coming week, I think the RISKDICATOR is going to move back up as the market moves back into NASDAQ stocks, more speculative stocks. Bitcoin's going to go up. We're going to see a reversal of everything we've been into so far this year. And we're going to see the RISKDICATOR start a bull market. they're going to want more risk. We're going to see foreign stocks do better as well during this seasonally bullish period. Yield curve. This is really interesting. So we've rearranged the charts here a little bit. So it's really basically flat from 2 years out to 30 years. Basically, a little bit of a bull here, you know, down here, up here, down there, but basically it's flat. The Fed has now raised interest rates. Look in the lower left-hand corner there. From 0 all the way up to here, and they say they're going to raise it all the way up to here, which would make the whole yield curve flat. Now, the 2s, 10s, we talked about that a number of months ago, it already went negative. This up here is the indicator which works a little bit better. It has been infallible since World War II. The 2-year to 10-year yield curve has called 14 of the last 18 recessions. It's already turned negative. Now I'm waiting for the 3-month 10-year. So we've come down from 225 all the way down to 140, but there is where it would be negative. So there's still a ways to go, but it's going to be happening this year. This is a bond market. Big bear market. That's what the red line was there for. But notice we poked our head above the downtrend line. Now, downtrend lines are a very poor indicator, okay? They're very gross. I have an old saying, which is that trend lines are made to be broken. So I don't really pay a lot of attention to this, but we might get a little bit, we're going to get a rally, out of bonds. Take a look. Here's our indicators. All of them screaming up. Now, gold is down here. It's not screaming up. And the CRB is starting to come down. So we're going to start to shake and bake up here a little bit. Look for the bond market to go sideways for a while. And then it may start going the other way. We'll have to keep an eye on it. Fully paid up members will go into this in more detail. Over here in the dollar is going to start coming down because interest rates are coming down. So the bull market in the dollar is over for now. Look for weaker dollar over the next couple of months. As I say, we're reversing everything. It's like what we were doing last week is the opposite of what we'll do this week. Here's the price of gold. Gigantic descending triangle formation. Pretty clear. And normally those would be broken to the downside. Now that's kind of interesting to me because if interest rates are going down and the dollar's going down, we should see strength in gold. But so far that hasn't been the case. So we're going to monitor this very closely. Because there's once we move another week or two into the future, these types of triangle formations often have a completely different interpretation. Right now, though, should break to the downside, but it doesn't look like it to me. Now, over here, we can look at our gold key indicators, and we've got 1 is neutral, and 2 are bearish. So you saw why gold's going down. You saw why gold's going down. Crude oil, as I told you, we called this beautifully, got you out of our long energy positions within a couple of days of the high. And I think we're going to stay under pressure here in crude oil. We're back into this gigantic mass of bars. I think this is really where the value in the market is. This is, let's call it between 100 and 110 per barrel. And I think we're just going to chop, chop, chop for a while. Bitcoin, I'm looking for a rally now. The risk on strategy of the market is going to help out speculative investments like Bitcoin. So here we can see the purple predictor starting to improve. It had been terrible over here. Now it's actually starting to lead the market to the upside. So rather than being short Bitcoin, I don't have a position on right now, but I'm going to try to find a technical pattern that enables me to get long without taking a lot of risk. So I'm bullish, but don't have a trade yet. Okay, freebies, come on, get yourself together here. Hey everybody, Courtney Smith here, and I just wanted to kind of reveal with you one of my secrets of my success, and that is I use a website called stockbutler.com. And the reason I use it is because it saves me so much incredible time, and it was based on my forms of analysis. The Stock Butler was developed by one of my brilliant students. Of course, all my students are brilliant, you know that. And he designed it around my technique for fundamentally selecting stocks. So all you have to do is you come here, you go to rate, you go to best of the best, that's the name of the technique, and bingo, there's the list. And then, since there's only 4 stocks there, no problem. Go up to rate, go down here to advanced stock list. I usually change this to main E table, update the list. Anything in green, I'm interested in. Now, I know that these are fundamentally powerful stocks. Now, all I have to do is go find the correct technical entry and exit point. So, Stock Butler saves me a tremendous amount of time, keeps me focused on only the best of the best stocks instead of wasting my time on other garbage. All right, everybody. We'll see you later.